I bought above the second consecutive bull bar. We had a triangle and a double bottom, and then two consecutive good bull bars, so I thought first reversal down wouldn't get very far. We are at the top of a trading range from yesterday as well, right here, so right around the high of yesterday's range. And this is a possible final flag, but I thought the reversal up was strong enough that we had a chance to go higher. We have a double top as well, but three consecutive bull bars, so I still think first reversal down will be bought. We went below this bar, so if we create any bear bar here, I'll exit because it would be a second entry sell and a double top. I'm not sure how much higher we go because it's a potential final flag. I have an order to get out 5 shares of my 10 at 20 cents, but I may get out all of it there. And I may actually get out break even if this bar doesn't look like a decent breakout bar. I got out half at 10 cents and we just broke out. So I still have half. In my head I was thinking, I really feel like getting out half early at 10 cents instead of 20. And I know that means that in 5 seconds we're gonna break out, because usually by the time I want to exit half early is the time we're about to break out, and it happened again. Anyways, I'm out at 10 cents instead of 20, and I have 5 shares left. Ended up getting out there, both halves at 10 cents. Just didn't like the tails on top, especially because we're at the high of a potential final flag. So I could have gone out with 20 cents if I didn't exit early, but out for 10 cents on 10 shares, so up $1. If the bar closed on its high, I would have stayed in. But because of the tail closing below these two bars and closing below the first top, I thought it'd be best to just exit. I bought this as it was reversing up after consecutive climaxes down. Got out half at 15 cents. I ended up exiting the second half as it came back down to my entry. It was a little bit too aggressive. I thought that there was a chance we'd get up to this high because of the 3 pushes down, so a spiking channel. But I didn't know we'd get there in 2 or 3 bars. I thought we'd get some kind of rally from the consecutive climaxes, and then maybe go sideways and then get a signal bar up to the high of the wedge. So I didn't know how much upside I had, and normally in this kind of situation I would just scalp out the whole thing because I was risking about 15 cents and it went up 15 cents, so I could have scalped the whole thing. But I only took half, and then when it came back down to my entry, I decided to just get out the other half. So maybe a little bit aggressive here. I didn't expect this to rally this strongly, but I ended up getting out 15 shares at about 15 cents and the other 15 about break even. So at $3. I'm gonna buy above this bull bar if it closes on its high. I don't think that bar is good enough because of the tail, so I'm gonna wait to see if this bar closes on its high and then buy above that. I have my order in to buy above this bull bar. It's a cup and handle, really tight bear flag, so you'd think second leg down, but really strong reversal up. So we're holding up here, 2 legs down, so it's a high 2 buy. So I think it's a valid buy, and trading my full size that I can. So risking about maybe $18 because I can only trade 60 shares. But I think it's a valid buy. I'd look to take off half at 20 cents and see what we get with the other half. This is a trade where I'd be happy with the outcome either way, even if I get stopped out, or if I have to exit below a bear bar down here. I'd feel okay with it. I think this is a good setup and something I'm comfortable with. And these are the kinds of trades that I actually want to risk, like take my full risk on, because I'm okay with whatever happens. And I'll know that if I do this 10 times, that it's a profitable strategy. And I do take this often. This trade above a high 2 after a cup and handle. and this is the first time I've taken it with in this phase with $25 risk, but I know that it's a reasonable thing to do. So whatever happens here, I'm okay with it. I think I have to exit below there, even though it's just a little bit higher. And I think I get out with a smaller loss if it lets the bulls out above the bull signal. I think the bull signal was reasonable, so it might get close enough to let bulls out. So I might order to get out 4 cents below my entry to see if it'll let me out. Otherwise, I'll stop out below the bear bar. Okay, I got out there. I think it's still on the swing, but that bear bar is not something I wanted to see. And I thought that if it's going to give me an opportunity to get out close to my entry, I'll take it, because that's a pretty disappointing bar. Oh, oops. Damn it. That sucks. I only exited 30 shares instead of 60. That really sucks. So I took a bigger loss than I needed to. What did I do? I exited 30 shares for a 4-cent loss, or 5-cent loss, and then other 30 shares for a 10-cent loss. So had I exited where I wanted to, I would have lost 4 cents on 60 shares. So that's a really negligible loss, $2, $2.50 or something like that. But I ended up losing $4.50 because I didn't change the limit order. That was supposed to be my target up here, so I dragged it down, and it was only to take off half, so I only exited 30 shares out of the 60. So that sucks, but I still think it was well managed to take the opportunity to get out with a smaller loss when it went back up to my entry. So down 346, but put into context, even just scalping out for 20 cents to the upside, if it did go up 20 cents, if I scalped out my whole position, it would have been 20 cents on 60 shares, which is $12. So if I can manage the losses like this and lose $3 or $4 at a time, but even just a scalp for 20 cents here is $12, I think that's really worth it. And usually I would scalp out half and leave the other half to see what we get. So I think even this loss, put in context, is a good loss. I bought this close after we broke out. We had a double top lower high, second entry sell, and then accelerated up. So potentially lots of trap traders. Big enough breakout, I think. Probably going to get at least a small second leg up. We got out 20 shares for 20 cents, so $4. So up 50 cents now. So I think I'll be done for the day. That's probably my last trade. Ending about break even. But I'm still... Oh, I didn't mention this one. I don't think I recorded it. I sold the close here when we got up to the top of the micro edge. And I sold the close as soon as we got there, thinking that it's probably still a minor reversal. And I realized that I don't want to do this anymore. This is just my habit to sell the close when I think we're probably going to get a lower high major trend reversal. And so when we get up to a reasonable target, no matter how strong, I just sell the close. But I don't want to do that anymore. So I did it, and I realized that I'm not doing this. I tried to get out break even, and then we got follow through, and it didn't let me out break even. So I just exited at the close of the bar when we got the follow through bar. And so I lost about $1.50 there. So I was up $3 at this point, lost $1.50 here. And then after this trade, I was down to $3. And then now I made $4 on this one. So finishing the day 50 cents up. I will take one more buy here, as long as we have a big tail on the bottom. I think there's probably buyers below that bar for a test of the high close. I'll take it, but I'll exit below any bear bar that closes on its low. And I'm looking to get out 3 cents below the high close. I think it's a strong enough breakout that probably buyers below, and small second leg up. So we'll see if I get filled. And I'm trading my full size, so that's what I said I wanted to do. So we'll see if I get filled. Okay, I'm filled. And now if this bar closes on its low, I'll exit. I usually don't like to get filled that late in the bar because if it fills me on the last minute, that means it's already on its low. So it increases the chances of me having to stop myself out. But I think it's reasonable to assume that we could get a second leg up and at least test a high close. But I'll only exit below here if it closes on its low. So I'm long at 338.10, target at 338.25, so going for 15 cents. And premise is test to the high close. All right, I did exit there, below that bar closing on its low, and ended up losing 3 cents, 50 shares, so $1.50, so down $1. And that was kind of like the main takeaway from, I don't know where it was, but even yesterday I did the same thing. I was like, if there's one rule that's ingrained in my mind, it's that I can't take a full loss below here. So like yesterday I bought here, we got a bear bar, I cannot afford to let my stop get hit. So any sign of disappointment, I have to be out. And so that's what I did yesterday as well. But the main, and like look at it right now, like, that's nuts. And the one day that caused that was what I'm fighting back from right now. The reason I'm down $40, or was down $40, is that FOMC day where I thought buyers below, and I was really confused by this day because I really thought it was reasonable to do what I did right here. So this was the day. Let me see if I can get a better look at it. So right here, we had a bull channel, and then we had a strong breakup from a bull channel. I thought 3 consecutive bull bars, and then a bear body, but big tail on the bottom. So I bought below there, thinking we should get a second leg up. And I got this bar, and then I got this bar, and this was the give up bar. I didn't exit below here, thinking that it was still above the high of the buy climax, so I would still be okay. And then ended up getting stopped out on this bar. And it reversed up, but that's fine. It came all the way down and I took a full loss, $25. And right there I realized I can, and then I asked Al, he said he wouldn't have taken this. He actually sold here. So it was a bad entry from that, if you look at it that way, but I think the premise is okay. And given that it's an okay thing to do, I can still take it with that premise in mind that we might get a second leg up. But because it's also a potential climax, I have to be very, very quick to exit because I cannot take a full loss. So I cannot let my stop get hit. I have to find a reason to exit early. So right here, when I analyzed this trade, I was like, I saw that there was a very clean opportunity right here below this bear bar closing near its low, that even if I did take a trade that was not the right thing to do in this kind of scenario, I still had a way out right here when the bar closed on its low. And so when that happens, I need to be very quick to exit. And then if you get a high one, then I can buy above that. But I can't stay in here hoping that it reverses up. And so from then on, I'm just looking at these trades and trying to find any reason to exit, because I can always re-enter. And so that's what I did yesterday when we had this potential bull trap. Right here, we had a bear follow through. I just exit. And today, same thing, exit. And the beautiful thing about it is that I lost 3 cents because the bar that closes on its low, because I'm buying the low of the bar, it usually isn't that far below the low. If it is, then I lose a little bit more. But there usually is a slight sense of disappointment before this massive give up. And the same thing happened on the FOMC day. I have to find it again. Right here is that I bought this low, and the next bar that closes on its low, if I sell below it, exit below, I lose like 3 cents. So it gives me an opportunity to make 15 cents if we rally up. But if I take an aggressive exit below the bear bar closing on its low, I lose 3 cents. So I think that makes it work. That even if I take bad trades, like that one, according to Al, because he thought he actually sold there, even if I take bad trades, if I'm quick to exit and I can recognize when the odds shift against me or back to neutral, um, I can take dumb trades. And um, I mean, obviously, I don't want to, but I can take them if I don't realize they're dumb at the time. If I have a really, really clear exit strategy that's aggressive, then I can afford to take them and not lose a lot. So here I save myself a full loss by being very aggressive with the exit. So um, I'm really happy with the management. Maybe it was a bad buy, but I think the management was good, regardless of if the buy was good or not. Now I'm definitely done for the day.